Hello and welcome. You're with us here on Cryptonomics. I'm Abha Bakaya. Joining me, Mridul Gupta, CEO, CoinDCX. This is the show where we decode all things crypto for you, brought to you by CoinDCX and Business Today. So let's start from scratch. We've seen this, phenomenal plunge. It's not just crypto, I know. We're also seeing it in equity markets. But for a layman, what does it mean? What's causing the crash? Is this something deeper? Is this the end of the crypto phenomenon? As some would like to claim. How would you analyze it?
Yeah, so I think we are living in a world where everyone wants to be risk averse. Right now, there's Russia, Ukraine, there's Fed increasing the interest rates, and then there is global petroleum prices and everything around that. So I think we're generally living in a world where people don't want to touch risky assets, which is basically resulting into downward market crash across the board, right? Nasdaq is down, NYSE is down, NSE is down, crypto is down. So I think it's across the board. One thing which is unique to crypto is its global presence and global community. So I think there will be a strong sentiment amongst a core set of people who believe in crypto and are building for crypto because it's a new ecosystem. It's not just a financial market play. For young investors, what I would urge is that this is a great time to be learning about crypto and why should they be investing in crypto. I'll give you a simple example, right? I think we are now in an atmosphere where everyone should spend time learning about it and then take baby steps into the investment layer. Great time to be sort of readjusting your portfolio, taking new positions. We generally end up advising investors to invest small amounts more frequently versus big amounts at specific points in time. So I think that advice is a golden advice. It has stayed true for probably 500 years in the investing circles. So I think that advice holds true today much more stronger.
So are you seeing any kind of knee-jerk reaction from investors, in terms of queries or withdrawals or just panic?
No, actually not. So we are seeing a lot of people. So we typically have two kinds of personas we end up talking about a lot, right? One is a very trader persona who wants to buy, sell a lot more frequently. And second is investor persona who would typically hold for a longer period of time. So trader persona is, constantly rebalancing their portfolios. There are so many things to learn from them. I don't think they're panicking. I think they understand the dynamics of the market, having traded across multiple markets over different periods of time. Investors, yes, they do worry about the reds in the portfolio, but I think a lot of them are also beginning to realize that, market is extremely down right now.
In equity markets, Mridul, everyone talks about how this is just a correction, not a crash, because of the kind of uptick we saw the last few years. In crypto markets, how do the numbers stack up? And is it different across, as you mentioned earlier, across some of the different coins as well? How would you assess what would make a good investment at this time?
For a novice investor out there, I would urge them to only look at, for the lack of better word, blue chip coins, right? Bitcoin, Ethereum, Solana, Polygon. But once you have crossed that bridge where you know what crypto is, what blockchain is, what Web3 is, what the coin is trying to achieve, right? I think that's the point where you should take investments into those other coins.
On Bitcoin or Ethereum or some of these, as you mentioned, there was a lot of technical analysis talking about how there's downward selling pressure and that could trigger a further sell-off. Getting technical now for a moment, but for those that are watching us that are, very ingrained in what's going on, they must be tracking those levels very closely. Share with us the trend, what the risk is at that level, what you see happening.
Sure. So see, financial markets can be very complex, right? Because a lot of people are taking positions and a lot of them are hedging it with the help of complicated products around options and structured products around OTCs, right? So, and there are different estimates because no one knows what the market is, what positions have people taken. So I think when people end up taking margin positions and more riskier positions, they hedge it up, right? At some point, the course correction happens and you have to liquidate your positions, right? Now, what price do people have most positions is our best guess, right? Some people call it 20,000, for Bitcoin, some call it $15,000, some call it $10,000. So that's our best guess. I would not be able to comment on that number. But what happens typically is that once the prices hit that low, or in fact that high as well, there is a market readjustment which happens, which is much faster, right? So whatever that price is, I don't know the price, but if the market hits those price, there's a larger recorrection which happens, and this larger recorrection could be either of the two sides. The price could go down further, or the price could come back. That depends on the position people end up taking. I fundamentally believe that if you take a long-term view of the market, all the supporting parameters for blockchain continue to be up, right? Which is monthly active users in different blockchains, be it Ethereum, Solana, Polygon, etc. Monthly active developers in different blockchain, number of code lines being written in different blockchains, total value logged in the DeFi ecosystem, number of NFTs being generated and consumed by the consumers, number of games which are getting decentralized and consuming decentralized protocols, right? So I think those are the stronger measures of what's happening in crypto. Everything else outside it is a distraction, because financial markets, as you would know best, are sort of, the prices get determined by multiple other factors around the markets and not the core development in the market alone, right? So I think it's important to look at those factors once people are looking to build in blockchain, looking to build in Web3, and looking to build in crypto.
Do you see the nature of investing in, changing slightly from the 4-5 avenues that you just mentioned? Do you see any particular one growing faster than another?
I think anything which is fundamentally creating use cases around crypto blockchain will get picked up, right? Number one trend we are seeing in this market is DeFi. Globally, I think DeFi protocols are growing very fast. They are picking up the total value locked, which is one of the key metrics to look at, is growing very, very fast on DeFi. I think in DeFi, we are at a stage where we were in crypto 7 years back. So it's going through the same cycle. I think verticalized NFTs are getting pick up. Verticalized NFT would basically mean that, let's say, in US, there are companies who are creating NFTs around basketball leagues and soccer leagues, right? And it's an opportunity for fans to engage directly with the players. So that market is picking up very fast as well. And third, I think, is gaming. Gaming is a very complex industry. It's a huge industry, but the way blockchain is impacting gaming is also in multiple forms and factors. Number one is you can buy different skins and avatars in games and in metaverse with the help of blockchain technology. Number two is the fundamental reward and fundamental currency around games is getting reconstructed on blockchain, and the coins are getting created around that. So I think that is the third market, which I would say is picking up very fast as more and more people and more developers are now trying to create decentralized games. So I DeFi, verticalized NFTs, and I think gaming are three big trends happening globally across markets.
Consistent selling pressure, let's say maybe till July, like you said. I mean, it's anyone can hazard a guess, even in equities. We don't really know. It's a debate, but I'd love to get your prediction here.
Yeah, I wish I could have known that, because then I would have made millions of dollars. I can comment on the key factors which are impacting the prices, right? So Fed further increasing the interest rates is a one strong factor which impacts prices globally. Anything to do around geopolitical corridors around Europe and China does impact the prices globally. The regulation which recently US has come up with around crypto being monitored by CFTC and various modalities of that does impact the crypto sentiment globally. And I think the newer blockchains which are getting adopted would be, I think, the fourth factor. So as you said, that when you look at prices, I think a lot of external factors impact the prices a lot more. But when you look at the core building activities and core use cases, it's the internal factors which end up impacting a lot more.
Okay, so just to wind up, you talked about how it's always a wise strategy to do smaller and investments over a period of time, but also from a trader's point of view, and for someone who's really getting their fingers burnt in the current volatility, any advice, any strategy you'd like to leave them with today?
Yeah, I would. So see, for traders, I would urge them to use more sophisticated tools, which are there on our platform, CoinDCX Pro app, and on website. These are tools like limit orders, margins, stop loss limit orders. There are tools where you can deploy your money in earn a passive income on that. So I think for a trader, it's very important to understand how to hedge their positions and take those bets more meticulously versus going super aggressive and taking only one-sided bets.
Okay.
So I would urge them to use some of these tools and balance and hedge their portfolio at every big price movement, right? So if I'm taking a view that let's say Bitcoin will hit $50,000, right? Only one-sided view will can hurt me really bad if the markets go the other way, right? So it's important for me to also take a hedge at let's say $15,000, right? So that even if the markets sway against what I predicted to be, I'm not in severe red.
Okay. And for an investor, you're saying stay invested or continue to invest, perhaps even a good time to invest at lower levels.
Yes.
All right, great. Mridul, thank you so much for joining us. That's our weekly wrap on all things crypto. Do tune in again as we continue to decode all the current market action.
Thanks, Abha.
If you like the video, do like, comment, share and subscribe.